Hey everybody, and especially the subscribers here to the Teaching Tax Flow YouTube channel. Thank you. Thought we'd throw that out there and start with it. Obviously, I'm back here again with Mike Reed, CPA from Integrated CPA Group. And, I guess we can call him an honorary team member of No, you're a voice, Mike, of TTF. So we just got to say it what it is. But obviously today we're going to dive into another topic. So we've been pretty good about discussing some things, right, that I believe a lot of people may have questions around, but they don't have, well, let me take that back. They have a lot of questions around stuff. They have a lot of answers, but they probably don't have the full story behind a lot of these. So today we are going to dive directly into looking at these three tools that me and Mike have just discussed before we hit record. I take zero credit on developing them. They're all Mike's, obviously. We're going to look at revenue and setting some net income goals and how just everything plays together. So think of it this way. You have revenue, you have net income. We're going to define, obviously, what the tools are, and we're going to dive into these tools. And Mike, you always have fun props, sir. I don't have anything around me except, some bananas. And I got some sunglasses, so the future is so bright, sir. I'm just gonna, these things are like, everybody can see my office now, what I have in here with them so shiny, so which I can't see myself. So, anyways, Mike Reed, welcome back, man. Thank you for hanging out with me again here.
Yeah, I appreciate you inviting me back. It's been a pleasure.
And you know what? I appreciate you coming back to these because you especially, I think you can vouch for, you have no idea what's ever going to come out of my mouth. So I appreciate you taking the gamble, we should say.
Yeah, absolutely. Now, keep me on my toes because, today's topic is, thinking about what could or may not happen next. So as much as you can try to throw me off here, the better, I would say, because we got a forward-thinking discussion today in terms of the tools we're going to use
try to throw you off. Okay. We're going to see what we can do here. All right. You do know all the answers, though. Even this way, you know a lot about this stuff. Even if you were to completely BS me, your delivery of it is so refined, right? Like I'd be sitting here like, wow, that's how it's done. But I can say this, at least from what I know, I don't think you would do that, A. But also, B, if you were yanking my chain for any period of time, I could probably tell in your face because I don't think you'd keep a straight face that long. But
no,
it's all good.
Nah, you'd get me eventually.
I'd get you. Well, let's cut into this. So let's start off, if you're okay with that too. I know we talked a little bit about on the last podcast, but let's briefly and concisely, we could say, let's define net income, cash flow, actually, or we'll get into shortly, but just what revenue is, right? So like revenue and net income. How would you tell a client that, or anybody on the streets?
Revenue is that cash that you're getting for providing value in a service in a trade or business. It's just that raw amount that's coming in. Net income is that revenue minus the expenses, those expenses that you expected or needed in order to generate the value to get to that revenue. That end result. Cash flow is just the ins and outs of cash that comes to your bank account. And there are many other transactions that do not relate to revenue and do not relate to expense. If we don't maintain those, they can become an issue. And oftentimes we get sucked into looking at one or the other a little bit harder in real time. And we don't take the time to build some assumptions or anticipate how that might play out in the future. You get that bank loan or you get that big stint of one-time cash into your bank account and it looks good and it looks healthy and oh my gosh, this is awesome cash flow. But your net income isn't producing the results that you need to. Consequently, it's not if, it's when you will run out of cash. And so you can't get too blindsided and into the idea that cash flow is your number one marker. Thinking about net income and what it is, how it produces a healthier future in combination with needing loans and stints of cash to get you along the way, combining that all together and seeing how it plays out in the future. And nobody knows the future. So let's be clear, ain't nobody knows the future. But hey, what does this look like and when I may or I may not get into trouble as these two concepts play out?
I love it. That's a great way to go over it too. And I guess, and this is probably going back, I'll put a number on this, maybe 20 years, 25 years, right? Um, I worked for my family. It was a fishing tackle manufacturing company in a marina. So naturally, I grew up being a fisherman. And somebody once, and you know what? It might have been Chris actually, Pacuro, that explained it to me, thinking of, net. And basically, like, you have a fishing net. I don't have any prop around me. I could say, hey, this is a fishing net. But obviously, there's all these holes in that net, right? So you go, you scoop up everything you have. Okay. Revenue, expenses, all this stuff.
Mm,
With all those holes in that net, everything rushes out. You're left with what you really want, right?
yeah.
Your fish or your net income, right? So is
Sure.
that kind of a halfway pull it out of my back pocket way of explaining it too? Or-
Sure. No, I like how you think about, all the extra stuff you had to do to get to the result you really wanted to. And if
Yep.
revenue was just enough, if somebody would just give us revenue and we'd have to do all the expenses, that'd be nice, but that's more of a
Right.
gift.
I feel like I seen it
Usually doesn't
somewhere
happen.
in, I don't know, maybe the past year or something. It was on I don't know, a credit card application or something, and I couldn't help but chuckle, right? Because I feel like they asked, "Hey, what's your annual revenue?" And to me, I'm like, "Okay, that's kind of a dumb thing to ask if it's looking for a lender of any sort, right? Because really, you could be making $10 million. You're just a really crappy business person, and you're spending 999,000 to make and I shouldn't say
Exactly.
you're a crappy person, but sometimes that's what it takes, right? I mean, it's interesting that
No,
that's what they were asking.
absolutely.
I think I threw you for
Without
a little
getting
loop
too
there.
much into a side tangent, they all do kind of have a different thing that tells a finance person, but I
Right.
will punt that detail for another time.
Alrighty.
I want to think
I
about
like
though, like the tools, and because you were talking about a net and like a tool,
Mhm.
that's a tool, right? That you're using to catch fish. And there obviously I want to introduce some tools, but the first tool that I think that some of us or some people or situations would kind of are unsure of what tools to use is really anything laying around like an 8 ball sometimes seems like as good a tool as any because of anything I'm going to say, nobody knows the future. All
You
right.
would
So
have an eight
sometimes it's
ball.
just easier to be like, I don't know what the future is. Am I gonna, I don't know, hit my revenue or my net income goals, whatever number that means? And I guess today, hey, it says without a doubt. So hey, there you go. I'm good,
Right.
right? That's all I
Good
need.
thing you
I don't
good
know the
thing you changed the
future, so
batteries in that thing.
yeah,
Otherwise, how bad would that be? It's like you're
yeah,
guessing.
there'll be a lot of shaking.
You're sitting there like, "Come on, give me an answer." It's like, "Is it that bad?"
Exactly.
But that's great. I mean, and that's it's funny as it is, like, of course, you would have an 8 ball as a prop. I never know what you have. But really, I mean, it kinda does, and I see this, even just thinking a little bit deeper into it, right? Like, being a business owner, you're in control of that 8 ball to a certain extent, right? Like, you're in control how many times you shake the thing, if the batteries aren't good in it. You have no control of the output. But you know, in an office, you could be working like crazy, towards something. They're hoping you're getting a good answer, and you don't know. It's the future is so unknown that I mean, I'm curious. Let's put it this way: I'm very curious to see how these tools that you say how they play out and how they play together. I should say because I know you're getting to something here.
Let's see if the tools I talk about produce any value in today's podcast. I'm kind of curious.
Come on, 8 ball, give me some good.
Hey, says Outlook good.
This thing's rigged. This is rigged.
I promise that's what it said.
You know what? And I would give you a hard time, but I know if that's the kind that you have to, like, shake it, set it down, and then, like, look over it to see it, I would tell you to prove it to us, but I'm pretty f yeah, blanks out.
It
It's like
works.
the reset button on old BlackBerry. Uh, Anywho,
Well, despite how tempting it is to just say, I don't know what the future is, it's as good as shaking an 8 ball, which may sometimes feel like that because it's all a guess. There are some tools that I think can help guide the ship a little bit. They're not going to anticipate every headwind. Every business has a headwind, whether it's in our control, a lot of it outside of our control. but it's going to help us at least trend through the waters and consider a few things. So I got three tools I want to introduce. First one is forecasting.
Okay.
We might understand what forecasting is from a generic description, but really, what is forecasting? Like, let's break it down. So
Mhm.
forecasting is considering, taking, and identifying the net income that the business has produced, also the cash flow is produced. Consider those two as different concepts, and identifying how they have historically trended, plus other key considerations. And you add those two together, now we're talking forecast.
Very similar
Historically,
to a meteorologist, right?
sure,
Like you're looking at weather patterns,
weather
what they've been
patterns.
over X number of years, but you're
Mm-hmm.
also looking at what influence is kind of stewing off in the West or wherever,
Yeah.
and you're taking an educated guess, or is one of my favorite words, guesstimating,
Mm-hmm.
uh, what's on the horizon. So very similar to what you're talking about here.
Yeah.
Mm,
Whether
okay.
people have a lot of record keeping, they have a lot of history. So does your business have good bookkeeping? Have you been keeping good charts of accounts? Have you had good consistent bookkeepers that are making the proper entries with proper reconciliation work? These are all very key factors that give you that base to say, if this has been happening like this, and I can find some averages in there, it's more likely than not to occur again. It might not, I understand. But the truth of the matter is, what we see historically, and depending on how far we go back, depends on how the nature of the business works, right? And then we're talking details. However, we look at that, we find averages, we create a trend,
Mhm.
and then we say that trend is more likely than not to occur. But we know that it might not because we don't know the future, right?
Right.
So what are those other factors and considerations that you should take into consideration that may or may not work with trend?
Mhm.
Consider seasonality in your business. Sales cannot always be flat. It never is flat. But a trend might say, yeah, on average, it's this. Yeah, but at the end of the year, sales always dip off. Well, then don't use the trend for that. How much is it going to go down? Well, how much did it go down last year compared to trend, right? You start playing with seasonality. If you know you're going to lose a customer or gain a customer that's not in the trend, you got to add that on.
Mhm.
Economic conditions. We don't know every economic conditions that's going to happen. We had tariff conversation lately. Certainly tariffs are going to impact the cost of product. That's a popular topic. It's more likely than not to occur, so we should consider those economic conditions in there. More likely than not, these types of extra add-ons, but tariffs are not going to potentially be baked in the last 12 months. If we went back to COVID, they could be. Right? So every time I'm resetting and looking at trend, I have to understand what's in trend versus those other key considerations. It could be a large expense change, really more material changes. You're going to get hit with a huge insurance bill that's like way bigger than what it has been historically? Put that in. There's always market increases. There's always inflation. You can't always know what it's going to be, but consider that trend, what's in trend, and what is more likely not to change from there that you know of.
That's
That's the
awesome.
forecast.
And before we skip on or move on, I shouldn't say skip, move on to the next one. I just want to bring up one point that we were talking about a little earlier too, specific to forecasting, right? So there's a huge difference between guessing and guesstimating, my two
Mhm.
favorite words. Guesstimating, in my mind, is taking into account what you've done, which brings in the estimating part of it and not as much guesswork. So you think, right?
Mhm.
Like if you got if you're historically unorganized, kind of a beep show, you know what I mean? You're doing more guessing than you are forecasting in
True.
the sense, right? Like,
Yeah,
so if you want, obviously the better, higher quality, lower margin of error, we should say in forecasting is really dependent on how good you've prepared in the past, right? The rearview mirror. How good is that? How good does it look?
exactly. And we talk about being organized and the value of that, good bookkeeping, all those types of elements. Obviously, to a certain degree, we have to be organized to prepare a tax return. So our entry level point is somewhere in there. But the more organized, the more systematic, and the more value we put into a bookkeeping process or individuals, the more options that foundational piece provides other tools that are more accurate, guesstimating, or better estimating, such as forecasting versus just a pure guess.
Right. Right. Oh, I think that's pretty clear. I don't think we could clarify that anymore, actually.
It's a powerful tool when used appropriately, but yes, back to your point, when the guessing is too much, then it's not very effective, and it loses its value very, very fast. Next tool is the pro forma. Very similar to forecasting, so we're going to kind of start with there in terms of some of those key considerations. But a pro forma has ideally a little more flexibility to it. It likes to play the what if game a little bit more. So while the forecast was anticipating more likely than not that you may or may not have a new customer, if you know about it, the pro forma will say, no, you're going to get new customers, and it's going to be this many customers. What does that look like? Well, are they good customers? What's the expense associated with taking on that customer? Do I have to hire a new person? Okay, well, how much does that person cost? How much does it is the sky is the limit in terms of how much you want to create a future and assumptions. It's very heavy assumption base. So yeah, history obviously plays a part in it, but I have to assume that I'm going to get the new customer. I have to assume that I'm going to find the right person at the right salary. I have to assume that other rates are not going to happen. I have to assume good market conditions that customers are going to want to come to me, right? Very heavy assumption based, very flexible, very nimble in that aspect. Helps you start setting goals a little bit better in terms of thinking of the what if scenarios that can occur.
Makes sense. Makes sense. So that pro forma is really just, like you mentioned, taking into account a lot of things. But yeah, it really is, the what ifs is the
Mm-hmm.
biggie, right? And I think somebody that's obviously involved in a business a little more often than not can make a better assumption than,
Mm-hmm.
just somebody, all right, let's pick this one. Like it's a little bit different. And like you mentioned too, some stuff, although it is a lot of assumptions, again, the more prepared, in tune, involved you are with things, you start to really decrease that margin of error. Kind of the same thing, right? And I
Mm-hmm.
mean, your recommendation, say somebody looked at this and they go, oh yeah, performance, I already know what that is. I need to create one for something like this. I mean, we don't have to go into any length of detail on this, but where does somebody go about utilizing a tool like this? I mean, is this something that they sit down with their team on? Do they napkin draw this thing? What does that look like in a perfect world?
Great, great, great question. All the above.
Okay.
Hey,
All right.
QuickBooks and these different programs, they have a place where you enter the amount. And they might have some and some technology that helps you look at history to kind of anticipate it. But this is a pro forma, and there's going to be technology and tools out there that you can purchase and do things with. So
Sure.
I'm not going to try to get into a list and what I recommend there and all that kind of stuff. But let's just say this, because it's a wide open, uh, uh, ability, and it has so many different avenues of what ifs. You just need a blank canvas. What do I mean by a blank canvas? Your canvas could be a napkin with a pencil. I don't do, or a pen. I don't do that. I think that I like to be a little more detailed. Honestly, Microsoft Excel, like just put it together, dump things to Excel. It's malleable. There, literally, find your blank canvas, find your tool that you just work within, and try and start working at it from there. The more detail that you can get on a pro forma, the more likely it is to be a realistic number that you can actually believe in, even though it's the what if game. It's not a matter of looking at a dollar on the financial statement. It's a matter of saying what goes into the dollar. How many units do I need to produce? How many customers at a certain rate? If I want to achieve a net income goal of X, do I need to be more efficient in my process? Or do I need to go out and get more revenue? What is the nature of how these expenses work in conjunction with revenue? If I have slim margins, I have slim margins. But if I have a ton of revenue and I have massive revenue goals, it will produce a high cash balance that you can go and live your life with. You don't have to have the most revenue in the world if that expense allows for a high output and high margin of revenue. What do those work with? And the only way to know that is to know how those units and how those expenses interact beyond the dollar a little bit. And obviously the dollar is that ultimate thing that's on a financial statement, but you got to dig deep. Do I need volume? Do I need better price? Do I need pricing? Pro formas are great for thinking about pricing and how if I change this price here and these customers accept, well, what if I lose customers? Well, you will be charging a higher price though. So how does that play out, right? I mean, that's hard to do on a napkin, obviously, but just for the concept and the example. And it's hard to have a program that is flexible enough to flip between all these things. I'm not saying they don't exist. There's a lot of technology out there. But being able to, and not have any misses, because a lot of times we get into these processes and we think of the big stuff, the big payments, and then we get hit with reality and we look at our P&L and we go, gosh, I thought I predicted what this was going to be. I thought my pro forma was good. Oh, well, you missed a bunch of administration. You missed a bunch of overhead expenses. You missed a bunch of, okay, so try again. The next time you do it, it's going to be better. And don't forget about those things because there's just so much. And the practice of trying to do this on a canvas and perfecting that canvas, that Excel sheet, whatever you choose, it just evolves from there. So it's hard to almost pick one particular thing. And it's hard to say I can only talk to one person or just sit at my desk and do it alone. You do need to talk to other people. You need to put the ball in their court because we all don't know, right? But everybody knows a little bit more about some specific area, be it revenue, be it customer, be it expense, to contribute value to understand that this is possible. It's realistic. And when it becomes realistic, that's when it starts to come together to start creating goals and budgets.
That's awesome. And Mike, hopefully you're okay with this. Let's actually recap and two parts to this here. Anybody that's been listening to this, go back about 5 minutes and just re-listen to what Mike was just talking about there. Because I think, Mike, the way you explain that and kind of walk through it, from numerous aspects or angles, it touches on so much more than just the development of a pro forma. Right? Like you talked about kind of beyond the dollar sign, like what that actually means. I'm going to start saving some of your quotes and like putting them up on little canvas prints in the back. But yes, go back and listen to this, everybody. But then also too, Mike, if you're good with it, we'll put some notes into a document, drop the link in the show notes for this. Yeah. And obviously we're going to touch on another tool here before we wrap, but that way you guys have it in front of you. For anybody that's listening and watching, just download it. It's probably like a page and a half we might get to, maybe a little bit longer, 2 tops, that hits all the key points of what we were talking about here. So you don't have to go and, start jotting down all these notes on everything. We'll make it very easy for you because these are so powerful. And it's very rare that I don't have anything to add to something that somebody says. Being a Maltese Italian guy who lives in the Midwest, I always got something to say. But this is awesome, Mike. This is probably one of the best conversations I think that we've had already, just because I think it has the most impact across so many people. If they've just gotten into business, if they're, in a new role or anything, they're looking to hire somebody, where does that impact everything, right? You start to realize that, again, the beyond the dollar sign, I think is probably one of the best things I've heard all week. And we're at the end of the week, by the way, when we recorded this, and I've heard a lot of stuff. So kudos to you, sir.
Awesome.
You get the little trophy. Here you go.
Wrap up the week.
Awesome, man. Well, let's take a look at this third one.
Yeah.
Your
Last
third tool.
The budget. Or I like to say the roadmap. Or I like to say my goals. Because budget just always gets a bad rap. Everybody gets, I got to follow a budget. I was thinking, I think that the word gets a bad rap. So whatever word we want to use. I like goals.
Yeah.
I like the roadmap because it really is the combination of a forecast, the history, what's more likely happening or not, plus a pro forma, what I need to be moving towards, what I'm targeting to create a goal. Because if you don't have a goal, by combining these different tools together, why follow a budget? Who cares? Why would I just spend X amount on X? What does it gain me? Like, I want to go do this. Well, because if you potentially are able to hit this net income goal, aka budget, everything that's associated with that, and it manifests into the future of this using good pro forma and forecast tools, you will achieve this. And do you want to achieve that? And if the answer is yes, then why wouldn't you be motivated to follow the roadmap? Why wouldn't you be excited to follow the budget?
Right.
You won't
It's
be
literally
able
telling
to
you how
all
to
the
get there.
time. Exactly. It tells you how to, it's the roadmap. And granted, like I said, there's going to be headwinds, there's going to be rough waters. And so despite the fact that I set out to do this, the silly thing about it is it's not necessarily going to happen. But the further off you are, it means more likely than not, there were just some massive assumptions and things that were well beyond your control. Or I hate to say it, but you didn't do a good enough job. And you were just too far off. You were too. If we create a budget that we can never hit, we were potentially living in the pro forma what if game land too much. It's very arbitrary and it's not useful. If we stick too much close to a forecast that's just historical and where we're at, we're not going to push ourselves to move on to the next level and say, yeah, but I didn't hit the mark. Or I did hit it. Yes, let's celebrate, right? If you don't have that ability to identify how that budget was your roadmap and how you did or didn't achieve that roadmap, you lose that guidance.
Right.
You lose all the backing of what you're really trying to do. It's the tool that determines and looks at that expense or looks at that revenue, and the budget says this is where you need to be, and then you have a variance. Look that variance in the face and be honest with yourself or your business or your circumstance and say, it happened and why? And the more you keep doing that, the more you're able to face that and say why, the more you will be able to potentially make better decisions. Whether that sometimes they're the decisions to say, hey, I can do this. Sometimes they say, oh, darn it, I can't do this. That pro forma I put together is not going to happen. I'm not going to be here in 12 months from now. And you can start to identify that if you're able to use the budget as that roadmap and that tool and really look at that variance in the face and be honest with it. So timing is key. Timing is very key. If I don't look at this on a monthly basis, or at least a quarterly basis, the value of this entire process is diminished.
Right. And it's almost like the clear the roadmap. And I'm going
Yeah,
to call it a roadmap because now you got me thinking the word budget is so negative, I think, to a lot of people because it's almost been overutilized as a scapegoat when
exactly.
you're saying no to somebody, right?
Right,
Like if somebody comes in here right now and they're like, oh yeah, let me paint your office. Be like, I mean, sorry, it's not the budget. Even though
right.
it's, it might only be a couple $100, just don't want them in there, but that's your way. It's kind of like your way out. But then, yeah, the clearer the roadmap is, if you do veer off of that a little bit for any unforeseen circumstances, you know what it takes to get back on, right? So
Yeah,
really, the roadmap, in a sense, using 3 points, right? You have your forecasting, so maybe that's your windshield, your pro forma. I don't know, might be the rearview mirror or something, but like basically that the goal seeking, goal setting roadmap is really like your peripheral vision, right? Like that's everything that's there, and you're constantly kind of moving about this and navigating it, right? So here's one question too about budgeting that I've heard people that do this. I've never done it that I can remember, although I probably have, right? Say somebody sets an annual budget for X for their business. Obviously, it's broken down into quarters or whatever it is. How detrimental is it if somebody adjusts a budget on the fly at any given point? would your recommendation be, again, every circumstance is different, but would your recommendation be more along the lines of just leave it, don't touch it, see where it ends at the end, see where it, kind of lands at the very end of the road on the map? Or would you say to adjust it now and try to figure out how to maintain, if that makes sense?
When you start to think about accounting and the various things that you do within it, there are I can make an entire podcast on the concept of periods, a month end, a year end, a quarter end, when you report this, when you report that. A forecast is conceptually the same thing, a budget that is. And it's all about strategy. It's all about checking in with yourself and the business. If I make a budget for 12 months and we have another COVID, why would I ever use that budget? It's trash because everything has changed. If the economic conditions or anything has happened that substantially changes it out of your control, you got to reforecast. You got to rebudget. You have to reestablish your position. Knowing when to reestablish should be a 6 to 12 months. But if there's a big condition or something that happens in the market that really changes your position, then now is the time. What you don't want to get stuck into is saying, well, I budgeted for X and this is what really happened, so I'm going to change it to this. That's not a budget.
Right.
The budget, yeah.
Okay. And I can see this almost being a real world example, right? Say you have somebody working for you, doing a very important task. Let's just say you have a, I don't know, you have an admin assistant. Let's just use that example because I think everybody kind of knows what they do. So you have an admin assistant doing a lot of the things that you might not want to do, but you physically do not have the time to do. And it's very important that those things get done. Very important to your operations. Let's just say you pay this person $40,000 a year. They know they're underpaid. You're going to scream and deal paying this person $40,000 a year. Say they wake up on Monday and for whatever reason, they are no longer employed by you to no choice of yours or by no choice of yours. And you go, oh crap, I got to do something. I need to hire somebody that still does the same thing or better. But even if you found the exact same skill set, exact same person, all of a sudden now you're spending $80,000 a year, say $100,000 a year. Significant blow to your annual budget, right? Because you thought it was a fixed expense, and now all of a sudden it's like, oh crap. So like that could be a real world example, right? So something happened, you had no control over it. You had to make that decision to maintain operations at all. So what you're saying there is, yes, you should go in because that is a very specific point in time. It's a very specific action you have to take that impacts that budget. Go in, reassess it, and try to get back into a comfortable lane, we should say, on a roadmap. Is that correct? Is that the best way to put it?
Yes and no. That's a good example. And it all comes down to your financial understanding of the materiality of the business. Because we can have a budget while simultaneously creating pro formas.
Ooh.
A budget is losing one employee is not a reason I would change a budget.
Okay.
I would look that budget, that variance in the face and say, oh man, for the next 6 months until I change this budget, I have to look at that variance in the face. Now, again, economic conditions that are substantial, yes. Not losing one employee.
Perfect.
Unless
okay.
That's like your only employee, then maybe it is worth, right? Again, materiality of the business.
Right.
However, there's no reason why I shouldn't have a pro forma that's playing that what if game. Well, I guess I lost this person. So what if I hire a new employee, blah, 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 blah. You can still run those cash projections and pro formas at any point in time on the fly right now. And so having that tool, that separate canvas that sits over here to the side that you open up and you play with the buttons of that thing. That's why fine tuning to having a good document or a tool is important than a napkin. To play with that in real time and project out what if while simultaneously saying, you know what? the roadmap was the roadmap because it was set on my goals of what I want to achieve. And just because I lost one employee doesn't mean I should reset my goals. Now, if I have
Right.
a massive change of something, then yeah, I might have to reset my goals. So you're protecting your goals and your roadmap against losing one person here or there by not resetting the budget.
That is a great way to explain it. Because honestly, when I asked that, I almost assumed that that would be a good reason to do it. So I'm glad that you explained that it's not, right? And then also you brought up a great point there too that I definitely want to reiterate. Um, as far as for that pro forma. So now it makes a lot more sense as well. Do it in Excel, save the damn file, go in and tweak it. Basically, you're creating a on the fly calculator
Yes.
that is fantastic,
Mm-hmm.
which, and some people say, oh, I like writing things down. Well, write it down, put it into an Excel file. And like you mentioned too, there's so much technology out there. I'm sure there's tons of tools, and you can probably go download a free Excel pro forma template from somebody or buy
Sure.
one for 19.95 or something.
Yeah.
But I think that's very important, right? Like using that as a working document that's always at your fingertips, because who knows when you might have to make a quick decision and you have
Yeah.
nothing and you want to remove your gut feeling from it as much as possible,
Mm-hmm.
right? Because sometimes your emotions and your gut feeling, I think, sometimes cross paths, the heart and head comparison. You don't know which one should be right until you make the wrong decision. But, anyways,
They can confirm that gut feeling too. Oh man, I think sales should be this, and I think that's the right number. That's the right deal I made with this person. Then you go back, you put in the perform, and you're like, it is going to work out. Or, oh boy, that was a bad decision. Like you might have that second reality after that, right? It helps
yeah.
confirm it. It helps guide the ship. Start making better decisions, right? If you're not making better
Mm.
decisions out of all this, then don't waste your time.
Well, shoot, I'm going to create a pro forma for these conversations we have. I think this is our sixth one, and I have a gut feeling that this one is probably going to be our best one because I think
Hey,
although we kind of went around, yep, that little guy again,
it told us we had a good outlook, right?
make sure those batteries are always charged in that thing, by the way, please. But yeah, again, this is a great conversation for anybody that has been listening to this. Again, just a reminder, show notes. There's a link in there. Click on it. We'll give you kind of the recap of these three tools. We'll put some contact information down there too. I mean, Mike, usually we put in there, a direct link to your LinkedIn page. That's probably the best way. We don't want to give your email out to everybody under the sun, but reach out to Mike if you have some questions on these things. Reach out to anybody in teaching tax flow, your tax professional, your accountant, your bookkeeper, any of these things. And they can probably help set you up with some of these. I mean, that's the great thing I think about people, Mike, like yourself, as a resource, right? Like you guys have done this so many times that I'm sure if a client came to you and said, "Hey, I'm really interested in making your pro forma. What do I do?" You can probably relate them to some other client you've had in the past, somewhat similar in some sense, and you say, "Hey, here you go. Here's an example of something to start with. Um, go at it." You know what I mean? So
Yeah.
everybody, again, listening to this in the TTF community, don't be afraid to lean on your resources. I did a podcast with Jim Ingersoll from Dealmaker. Actually, this week we recorded for the Teaching Tax Flow podcast, and he said something really great when I said resources and people and connections. And I believe, if I get this out of context, I'm super sorry, Jim, but I believe this is right. It was called people capital, I
Ah,
believe. So it's like, you think about that, like capital is one thing that we know, really what it is, but people capital, again, if that's the term, if not, hopefully it is, uh, those are the resources. Those are the people you can lean on for all this stuff. There's so much value in that. So kind of like these conversations, like we consider you, obviously, as we talked earlier, you're a part of the teaching tax flow capital, I guess we could call it. So
I
there you
see. I
go.
see the connection.
There you
Nice.
go. But I appreciate it, man. This was great, dude. I'm glad we got to run through this. Is there maybe anything else you wanted to add to the budgeting road mapping before we kick ourselves off of this conversation?
Not a whole lot other than when you get into this space, it's fun, it's forward thinking, it's still a guest, but we can certainly use these tools to make better decisions, because that's what the ultimate outcome it is. You're never going to have 100% accuracy, and that's not the goal. The goal is for it to be reasonable and to help us understand and anticipate, because when we can start doing that, man, the decision making just starts to skyrocket through the roof. We can start planning and build with confidence. And these different tools, they play off of each other. And so pocketing your thoughts into each one of them and when to grab one and having that good data is key. But you got to have good data too in the first place. So that's very important.
This is like vacation, right? I don't want to let you go. I don't want to leave. I don't want to go home. I want to keep talking about this stuff. But again, everybody, thank you for joining us. Mike, thank you for obviously doing it again, hopping on here with me. And yeah, I couldn't even stump you on this if I wanted to. I think my brain, anybody that knows me, that's listened to, 140 plus episodes of the Teaching Tax Flow one, I think we're creeping up on episode 30 of the Mr. R Show. This is our 6th conversation, all these other podcasts. It's very rare, again, that I just kind of shut up and take things in. My brain is like, all the neurons are firing right now because I can see how widespread just this information of these 3 tools can really impact anybody, from a solopreneur sitting at home doing freelance all the way up to, execs in a business too. So we look forward to more conversations like this. To be honest, I don't even know what the next one me and Mike are going to talk about, but I'm going to let him pick it. We're going to be back here in a couple weeks to have another one here, one of our little fireside, desk side conversations. We don't even know what we call these things. We just talk, and we have the exact same conversations when we don't hit the record button. So thanks everybody joining us. Subscribe to the YouTube channel if you have not done it yet. And again, I think it's the 3rd time I mentioned it. Don't be lazy. Show notes. There's a link. Get the recap on these. More importantly, plan for them and use the damn tools.
That's right.
We'll see everybody soon. Have a great week.